Hey guys, hope you're having an amazing day. It's Nicholas here from NFXUp.com. Today we're going to be taking a look at gold, US oil, and Bitcoin as usual, regular weekly analysis. If you just joined us for the very first time, if you find it very helpful, please like, share, and subscribe. And I encourage you to subscribe to our membership plan on NFXUp.com and also join our Discord community. The link's going to be in the description below to get more real-time updates and also live trading analysis and other important educational content which we share on a weekly basis. All right, guys, let's get on chat. You on our chat, we're going to start with a chat of XAU-USD, which is gold, the bullion, as popular as I like to call it. Following up on last week analysis, I think the last time we took a trade on gold was the jump from 3280, which we closed at 34 over about 1,000 pips trade. That was a very good one. If you missed that, you should not be missing out from our Discord community. We've seen gold enter into a long-term consolidation after then. This is the 8-hour chat. So we saw that consolidation lasted a very long period of time from that time I think in August till the end of August. And the last week of August, we saw our favorite guy, Jerome Powell, drop the big bomb about the Fed having to cut to deal with inflation and signaling a possible 25 basis cuts in the September or October, November next Fed chair meeting. And already we can see the market is already reacting to that, and we saw gold at this initial jump from 3300 to about 33.75. That was the effect of the news, and it got priced in. And from there, we already know when there is a big issue with inflation and there is a possibility for rate cuts. That means that long term, we're looking towards a decline in the value of the USD, and that automatically puts gold in a greater position for more bullish rally. And that is exactly what we're seeing playing out in the market. We're seeing gold moving up in this ascending channel. I'm going to go to the 4-hour time frame so we can see more data. So here we can see gold it's been oscillating. The movement has not been very straightforward. So that's why we see these short-term candles, showing a lot of indecisions in markets oscillation. But it has been slow but steadily going up. And last week, after that short pullback towards the 78.6 Fibonacci retracement level, we saw the massive jump. And that jump was about, I think, 500 pips, thereabout. About 400 pips. And then we saw gold hit this new SR level at 34.50. That's a significant milestone. Now, if you should observe, I'm going to go back to the 8-hour time frame. If you should observe, in the past, we've been seeing, my network is a bit slow, okay. So if you should observe in the past, we've been seeing this sort of like bearish divergence, maybe on the 8-hour or even on the 4-hour time frame. It's consistent. But this past few weeks, since the last test at 3400, we've not seen any indication for any bearish or bullish divergence. That tells you that a very significant thing happened in the market. The market is acting in an unknown territory. The market has been very indecisive long until the Jerome Powell's speech and the announcement for a possible rate cut in November. And now we see market starts picking up. So what I'm looking at right now, because I've not had any trade open on gold, and I'm not distributing any trade in our community as well. What I'm looking at is for a significant price retracement. Now we've seen price rallied up to 34.50, and it's been an uptrend for a very long period of time. There has been no significant pullback. It's been uptrend all through, and that's something you want to watch out for, because when market has been so much uptrend, it needs to rest, it needs to consolidate, and it needs to pick up again. So we're not going to see, probably we could see price try to test the upper band of the resistance, full retracement to that will be 34.94 or 3500, because gold would like to create a new mark or a new all-time high. And that happens, then we can see a sharp rejection. So right now, I'm not really taking any buy or any sell trade. I'm going to patiently wait to see if price is going to hit 3500 or we'll get a significant setup for a bearish correction. Mind you, if I'm going to be taking a sell trade, it's going to be very low lot size and very low risk, because this is a long-term bullish chart formation, and I don't want to be caught up in a long bearish setup. So I'd rather wait for the pullback and take a buy, because whatever pullback we're getting is just for us to load up more buys. Gold is currently bullish and to always be bullish till something change. Right now, I don't see any possibility of it changing, because there's still a lot of war. There's still global economic tension rising. There is a high level of inflation, not just for the US, both Europe and also globally in Asia, China, Japan, Russia as well. So all nations are suffering from this high level of inflation. That tells us that gold is likely going to get more value over time. So for now, guys, as I've said, these are our key significant areas. These are upper bound of the resistance, our lower bound of the support, and also we've seen price in this ascending triangle, in this ascending channel rather. We just had a short breakout, so most likely we could see price drop back to retest the lower band of the support. And maybe on an hourly time frame, we can see that play out this week. And you can see already there's a couple of rejection at this level. So we could see price drop back to 34.20 before heading higher to break out, to hit make a new all-time high at 500. But long term, gold is bullish, and I remain bullish on gold. Next I'm going to go to is the US oil. Now, US oil is being very, very confused. I'd say that because market has been acting very irregular. So since the last drop back we had from the effect of the war, that was the Iran and Israel war and the threat of the closure of the Strait of Hormuz, we've seen gold enter into this very irregular territory where price has been moving very rapidly up and down and inconsistently. But the good thing is that we finally found ourselves back below the long-term, the previous breakout we had about the descending channel. I'm going to show you guys that briefly. So this was our long-term channel, and this was like a very long period of time. Speaking about 2023, that's about 2 years support level that was broken. And the only reason why we went above that again was because of the abnormal market conditions, which was due to the war between Israel and Israel and Iran, as I said, and the closure of the Strait of Hormuz, which did not happen. And now we're seeing price going back to the normal territory, because this is like the fair price or the fair value for oil. Oil is not so valuable right now because there's not so much demand and there's more supply, and that's basic economics. So we are going to be looking at, for this week, I'm going to be looking at a potential breakout below this current formation. This is what going to give us a clear indication that, yeah, we're going to go back into bearish territory again, and that will be very, very sweet if we get that, although this is mainly price action and gut feeling, but I'm expecting us to see some sort of indication coming up. With the RSI is always telling us that there's weaker momentum, there's not so much buy momentum. We can see what happened here, and we can see what happened here, right? So of course it's both lower. There's no divergence here, so I'm not talking about divergence. I'm talking about the strength of the market. Even when we had this retracement pullback, there was not enough significant retracement on the divergence. So that tells us that there is not enough momentum pushing the price for higher prices, and there's high momentum and a high possibility for us to see price break. We already have that breakout here now, divergence on our RSI. We also have that possibility of that happening again here, and also here on our chart. So I'm going to show you guys something on the line chart so it's easier to see what we're currently playing at in the market. So we can have this setup coming up, and when we get a clear breakout below this, then we know we are in for a very long-term sell trade opportunity. And I believe that's what's going to be the case coming up this week. We should see very good possibility for a sell position coming up. Lastly, I'm going to talk about the BTC. Now, BTC is a weird one. So we were expecting us to see a breakout above this 68.2% 500 retracement level, I think, or 38.2 thereabout. So 38.2 thereabout, yeah. So, but that didn't happen. Instead, we saw a reversal. And honestly, at this point, I don't really know what is moving Bitcoin, because Bitcoin has been moving very irregularly. But there is hope. So if you look at the BLX chart, this is the same as Bitcoin, just like the Brave Index chart, and I'm going to be looking at this from a 2 weeks perspective on the larger time frame. So now we can see what happened in 2017, right? So in 2017, we had a breakout in July where price made a new all-time high, and then as well by at the end of August we saw this correction, which dropped price back to the breakout in early July. Now, it's significant because we're having a very similar historical play out here in 2025. So we are having the same thing in July. First week of July, we had a breakout which gave us a new all-time high where price rose up to about 123k, and then we saw that sustain for a while. And then at the end of August, we're seeing price drop back down to the July breakout. So now I'm not saying that it's a sign that we're going to start seeing, more after, because after this period, all we saw was bullish candles till December, where the market peaked. So it was all bullish, And if that same scenario plays out, it means that in September we're going to see bullish, 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 bullish till we hit the all-time high. But of course, history can look alike. I don't think it's a coincidence. I think sometimes history repeats itself a lot of time, and I've always been saying this, that this current cycle looks a lot like the 2017 cycle. And if anything like that should play out, that means we're looking towards the last quarter of the year being a significant bullish quarter for the cryptocurrency market at large, both Bitcoin, Ethereum, altcoins, meme coins, everything at large. It's going to be really, 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 really crazy. So while there's not so much on the technical aspect to talk about the future of Bitcoin, on the fundamental aspect, it's on the historical chart pattern movement behavior rather. There is a good possibility for us to see more bullish momentum in September. So I'm looking at the bullish September, October, November, and December, and the stretch towards January. So fingers crossed. On a technical aspect, we can actually put base here because this is close to the 50% financial trending level, which is a good support level. So we can see price already planning to retrace, and we can see that happen again. And maybe something plays out like this, and we get higher bands, and eventually we can hit all-time high again. So guys, I hope you guys got a thing or two. Like I said, if it's going to be very helpful, please like, share, and subscribe. Also, if you want to learn how to trade like this, subscribe to our manager plan on nfxup.com. And also join our Discord community where you get real-time updates and discuss one-on-one with me, always, Nicholas. Cheers.